Welcome back to the Deal Mastery Insider. Today, I've got an e-commerce deal that I want to break down and look at. I was looking at a few e-commerce things over the weekend, and this caught my eye, and I think you'll see why once we dig into it. But I thought it was a really illustrative case study of how to quickly evaluate an opportunity, how to do a little bit of diligence on a deal, and how to figure out valuations just on your own without having to be an expert in any of this stuff, right? So to start with, if I was looking at e-commerce businesses, I did a little bit of homework around multiples in the space. And this is certainly not 100% perfect. It's not totally representative of the exact multiple. And as you know, any deal at the end of the day, the valuation is negotiated between the buyer and the seller. The market multiples and where things are pricing really more than anything are just a function of the opportunity cost of doing other deals, right? And if somebody doesn't want to sell for a market multiple, you can't force them to. But at the same time, it really helps anchor the conversation and get a sense of whether or not the valuation we're talking about is reasonable or kind of within the realm of reason, right? And so here I've got a couple different sources you can see. These are all just pulled from doing some research around multiples. And you can even begin with something as simple as just Googling the word e-commerce multiples or whatever multiples you're looking for in a particular industry to start to get a sense of where some of these things trade. So a couple different sources here we can see from this resource. Depending on the category, for some reason, animals and pets, maybe they just had a low amount of data. Maybe there's some issues with that particular sector. Generally, e-commerce businesses are kind of trading around 3x, 3.5x. Maybe computer stuff's trading a little over 4, but kind of on average in that sort of 3 to 3.5 range. That is very similar to what this resource said. The average multiple is about a 3.6. This resource, very similar, obviously depending on size, but kind of, for something in the 1 to 500K SDE range, kind of a 2 to 5x multiple. It's a pretty wide band. And then I really liked this one because it kind of shows the impact of the aggregator boom on e-commerce multiples when everything was really hot and heavy in 2021 and how big they got. But they've kind of come back down. The data obviously doesn't go all the way to today, but I think it's still really illustrative of generally e-com deals are trading in kind of the 2.5 to 4x range. On average, obviously, size is also a meaningful dictator of that. So looking at a couple other resources here, I also pulled up Flippa because they have some pretty good data. You can see here both the average multiple and the top quartile average multiple here for e-commerce is similarly in that kind of 3 to 3.5x depending on deal quality. And then they also have it here by, I believe this is just sale price. So a little bit different than SDE, but you can get a sense. E-com average multiple for smaller deals is kind of 2.5 with a maximum of about 4.5. And then as we get bigger, it kind of goes up still in that sort of 2.5 to 3 range and sort of in that sort of 3.5 range, maybe 4, maybe a little over 4 for the largest and best deals, right? One other resource that Flippa also had, they had this chart of both e-commerce and Amazon deals. And this data is pretty recent. So this is for the first half, so through June of 2024. You can see here the average multiple is about a 2x and the top decile, so the top 10% of deals were trading at just under a 4x. And that's pretty similar. You can see Amazon businesses maybe trade a little bit lower on average, but maybe some of the best ones are actually slightly more desirable. Some of that could also just be noise from quarter to quarter or from half to half. But these multiples will help us determine whether we think the deal we look at makes sense. So with that, let's check out this listing that I found on BizBuySell, which is a company called Gownies. Gownies, pretty interesting. So they're asking $2.3 million. Well, let's find out if that's a reasonable price to be asking for this business. Cash flows $400K, slightly lower than I would anticipate for a business asking 2.5. That's pushing almost a 6x multiple. And gross revenue is about $2 million. EBITDA, same thing as cash flow here. So just call it $400K for round numbers. Business has been around since 2003. It's in the healthcare apparel sector, specializing in hospital gowns, labor and delivery garments, etc. So I think demand-wise, that's certainly something that there's a meaningful ongoing need for. There's about 6 total employees. They have a small warehouse that they could easily relocate. The team, except the founders, would stay in place. Kind of have a sense of this deal. So let's break it down a little bit. This is a little grid that I like to use to evaluate deals. It's certainly not a perfect framework, but it helps us just get a sense of, as multiples kind of exist on a spectrum from, let's say, 2.5 to 4x for an average e-commerce deal, how do we think about the factors that might put us on the higher or the lower end of that spectrum. So from here, let's start with, this is my assessment of Gownies. I haven't signed the NDA or the SIM. I haven't looked into anything other than their publicly available listings. So I'm going to make a few rough assumptions here, but I think I can get us pretty close, right? So management team quality, my guess is it's pretty low, right? Both of the founders are leaving and there's 6 total people. I doubt there's somebody there to run the day-to-day that the founders aren't already actively doing. Similarly, I think reliance on business owner is going to be really high, right? Sort of same reasons there. Not a big team. Founders are probably pretty integral to the business's operations. Quality of financial records, haven't seen anything to indicate that they're better or worse. So I'm just going to put that at a midpoint for now. Customer concentration, if they're selling e-com and into hospitals and all this other stuff, I'm assuming there's not a ton. If we discovered that there was after getting into the data, obviously we would update that. Hard assets, I'm assuming little to no. Maybe they have some inventory, so maybe it should be slightly higher here. And hard assets doesn't always penalize the valuation, but from a financing standpoint, it's helpful to know if the business has hard assets. Volatility of earnings, I haven't seen a huge historical time series, but I made an assumption that they're not terribly volatile. Growth opportunities, I'm not 100% sure about the space, but it seems like maybe there's an opportunity to expand a little bit. I mean, certainly more than $2 million a year is spent on things like hospital gowns, right? So there could be an opportunity to expand that. Recurring revenue, I put that as relatively low. I don't know for sure, but I don't think, maybe there's some customers of theirs that are buying very frequently, in which case I would move that up after my diligence. But at the same time, labor and delivery related products, you're not typically buying those on a recurrent basis. You buy them when you have a child, and you don't really buy them anymore after that. Customer acquisition cost, I don't have a ton of data. My guess is it's moderately high, just being in sort of healthcare e-commerce. I could be wrong about that. And again, if I got into the weeds and found out more, maybe I would update this assumption. Brand awareness, I'd never heard of the brand. That doesn't mean it's not very prominent in its space. They seem to think that it was a really strong brand. So I kind of marked it just over medium. Again, if I found some data to support an adjustment there, I would update it. Length of operating history, the business has been around for over 20 years. So they get a positive check mark there. Seller motivation and urgency, this is an assumption just based on the fact that the business has been around for a while. I think they might be relatively motivated, but if I uncovered that they weren't, I'd probably adjust that back down. Growth rate, looks like they haven't really been growing much. They've been around for 20 years and they're doing $2 million of revenue. So their growth rate can't be that high. Competitive advantage, I'm not really sure. There are probably some bigger players in the space that are eating the bulk of the market share. And I don't know that there's anything that really meaningfully differentiates them. Gross margin, without a little more data, I don't know exactly where the gross margin sits. So just kind of put it in the middle. And then product diversity, same thing. It sounds like they have a few different products. Maybe they're not highly reliant on one single seller, but as we get into the weeds, maybe we'll unpack that more. So based on all of those factors, right, about Gownies, where do we think it should be valued? I think it's a really good question. So do we use SDE or EBITDA, right? So the business is pretty heavily owner reliant, doesn't have a big management team. So I'd probably use SDE. And this is a chart I kind of compiled a bunch of the e-commerce multiples from before. You can see it there, sort of a range based on size, based on multiple. Now, this isn't perfect, but it kind of gives us a starting point. And they are doing the midpoint of 500K here is 2.5. They're doing 400K roughly of SDE. So at a 2.5x multiple, that'd be about $1 million valuation. But the real question is, should we even be at the midpoint? Right. And based on some of this assessment, especially the owner reliance and the fact that the business has been around for a long time, and I'm guessing hasn't really had an opportunity to meaningfully gain a lot of market share, I'd probably shade it down a little bit, not a ton, but I think I'd probably put it closer to a 2x multiple. Again, maybe I'm being too punitive here, but I think that's, given how owner reliant it is and the size, it's actually technically a little smaller than 500K. I think it kind of puts us around a 2x. So if they're doing 400K of SDE at a 2x multiple, that gives us an 800K valuation for the business versus their $2.3 million asking price, right? So my assessment based on that would be that Gownies is substantially overvalued, right? I would be stunned if somebody's willing to pay $2.4 million for an e-com business that's trading at about 400K of SDE or EBITDA or cash flow. And as you can see from the market multiples, that's way, way above where most of these businesses are really trading today, right? So even at a 4x, which would be probably the high end of where they would trade, the business would be about $1.6 million. And they're almost $1 million over that, right? So Their expectations are totally unreasonable. I don't think this business will transact anytime in the near future. But I think it's really helpful to get a sense of how we can use multiples and some market research to then look at an opportunity and really quickly assess, hey, how do we feel about this deal? Is it overvalued? Is it reasonably priced? This one screams overvalued when I look at it. So hopefully that was a helpful deal review. Gives you a sense of how I would think about evaluating an e-commerce acquisition. If you have any questions, just hit reply and let me know what you're thinking. Thank you again for being a subscriber to the Deal Mastery Insider.